QuickBooks Pro Plus Desktop 2022 Bills, Enter, Sort, and Pay. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Desktop 2022. Here we are in our Get Great Guitars practice file, going through the setup process with the View drop-down, the Open Windows list on the left-hand side, Company drop-down, Home page in the middle, maximizing to the gray area. Reports drop-down, Company and Financial, moving on down to the Balance Sheet Standard, customizing that report with a range change from the 010122, 123122. Fonts and the numbers, changing the font up onto 14. Okay, yes please, and okay. Reports drop down again. We want the Company and Financial, P&L, Profit and Loss. Range change 010122 to 123122, customizing that report, bringing it on up to the font size of 14 for font's sake. Okay, yes please, okay. Reports drop down again, Accounting and Taxes, Trial Balance to Trusted TB 010122 to 123122 on the range change, customizing the reports with the fonts and numbers, fonts to 14. Okay, yes please, okay. So now we're going to be entering bills and then paying the bills. Last month, let's go back to the home page here. We imagined the end of the period bills and so on, like the phone bill, the electric bill, and so on, as though we just entered them directly as checks as we received them. Now we're going to do the other method, which is to enter them in as bills, and that will increase the accounts payable, the other side going then to the expenses, and then we'll go and sort our bills with the pay bills item and then pay those bills. Now, if you're in a smaller type of business, you might be more in a cash basis system. You might have a lot of your bills possibly even set up to be paid electronically. You might be using bank feeds to pay some of the bills and basically recording them as they pass through the bank, in which case you're using more of the write checks kind of system. If you're in a larger company, or if you have more bills, the more bills you typically have, the more likely you are then going to enter the bills as bills so that you can sort those bills and then determine, which bills you want to pay when and where. And using the accounts payable, if you're, larger company or good sized company, then it's quite likely that you have a whole department that is in the process of, in essence, sorting out the accounts payable. So we're going to go same kind of idea though. We're going to just enter a few bills at the end of the period by going to the enter bill. Looks just like a check or similar to a check type of form, but it's a bill form, meaning that it's going to be increasing the accounts payable account. So the first one we're going to imagine is the Verizon bill for the telephone company, the same we did last time. So it's already set up for us. So I can type in Verizon. It'll pick up Verizon. We're going to put this in place as of 02/28/22. And this is going to be, I'm going to say for, what did I say, like 360, let's say, 360. And we'll have the terms. You could set the terms on when the due date will be, putting the due date here, or set the terms to the net 15 in our case. And then we have to choose the expense down below. Now, note that last time we entered the Verizon bill already, but we entered it in as a check. Therefore, it's not memorizing the transaction. If we had entered the Verizon bill into a bill, or if we were to be entering a check now, then it would hopefully memorize that transaction, which would make it easier for us to enter the data, because we'll have that account that should populate automatically. That will also make it less likely for us to make an error or to have accounts that aren't consistent. Consistency becomes important. If you're taking over an accounting system that someone else has already been populating, then if they've been doing a good job, then you can hopefully just kind of copy their system, and the vendors that you will typically be paying, you'll know who they paid last time, because hopefully it will populate as you go through this process. And or you could go to the trusty vendor center on the drop down, vendor center, and if you didn't know what account to go to Verizon for, which you probably would given it's a telephone company, you can obviously go down to the vendor of Verizon and check out the activity here, the last check that we had, open up the last check and determine what the expense account was, which of course is the telephone company. So we're going to close this back up, or telephone expense, because it is the telephone company. So let's close that out, and we're going to be recording this telephone. Might put a memo as to, which expense period we're going to be paying, but I'm just going to leave it at that. This, of course, will increase the accounts payable. Other side then going to the telephone bill. So I'm going to say save it, or account. Save and close it. And I'm going to say you've changed the terms. Okay, I want to save those terms too. And then let's go to the trustee trial balance, where we're going to see now the accounts payable increasing in the liabilities side of things. Down to the liabilities side of things, there it is, the accounts payable, the good old AP. So there's the bill there. And on the other side, it's going to be on the income statement in the telephone. There's the telephone here. Let's see it on the P&L as well, the profit and loss report. Let's change this one just for the month of February so we get a bit more detail. If I was to change this to, well, actually, let's look in here while I have the full range. Double clicking on the telephone. And now you see the difference in the two checks that we put in place. You got the check the first time that we wrote, and now we entered the second one with a bill, both of them expensing at the point in time we made the form, even though the check means we paid cash at that time. Bill means we did not, because it's an accrual system at this point in time. We still record it when the bill has been entered. All right, let's close that out and do another one. Back to the home page. Entering a bill. Let's enter the bill. And this one I'm going to say is for our cable. And I'm going to call it Spectrum. Spectrum is our cable company. So I'm going to type that in because we don't have that vendor set up yet. Tab. It's going to do a quick add, quickly adding the vendor. Tabbing across. So at the 228, I'm going to say that this one was 180. So could put the terms here. Let's say the 15 again on the terms. And then the other account, we could say, okay, now is there an account that is appropriate that was given to us by the system when we set up the chart of accounts? So we're looking for something like internet or something like that. And they got this computer and internet expense. So we'll pick up that one. Now you might be in the position where you're saying, well, I kind of like that one. I'd rather just call it internet expense. So instead of making another account called internet expense and then having two, if that was what you thought and you just want internet expense, then you might say, okay, I'm going to go to the lists drop down, chart of accounts, and I'd rather just call that internet because I think that's the one that's going to be more specific and I'll be able to see that a little bit easier. So let's just say, find it here in the computer and internet, which is here, and I'm just going to edit it, drop down, rise up, and edit that account, and then let's just delete the computer part and just call it internet, like so, and then save it and close it. And that allows us to kind of use the chart of accounts that is given to us, which might be more standardized, and allows us not to have double accounts, which can confuse us when we do data input in the future, resulting in us putting charges to two different accounts when they're really for kind of like the same thing. And it also allows us not to have too many accounts to kind of keep this thing trimmed down. Remember, after you do a couple of these months of data input, if you used this register directly from QuickBooks that gave it to you, then you might want to go in here and say, which are the ones that I'm not using at this point, and possibly delete those accounts so you can have just the accounts that you need, so that you'll be kind of more efficient that way typically. So we're going to go back to the bill then. So now it's just the internet expense. So this is going to be increase in accounts payable. The other side going to the expense of the internet expense. Let's save it and close it and check it out. I've changed the terms. That's okay. That's okay. And then we're going to go to the balance sheet and say if we go to the accounts payable, double clicking there, we see another bill for Spectrum. Closing that back out. On the profit and loss on the left-hand side, we see then the internet expense. That looks good. If I wanted to go back to the balance sheet, look at that liability and make another report related to it with the reports drop down, vendors and payables, and look at the vendor balance detail report, for example. There are our bills, and we were looking this time at Spectrum, the 180, that comes out to the total $3,900, which of course is the amount on the balance sheet. The other place you might be looking at this stuff is the vendor center. Drop down vendor center, and we could then say in the vendor center, we've got then Spectrum right there, owing 180. We might sort the vendors by the ones that have balances, like so. And we might go to the transactions, and we might go to that bills forms and sort the bills for all bills, or possibly the bills that we have open. Couple different ways where we might look at this information. Closing this back out. Okay, I hear you. I hear what you're saying. That was fun. Let's do it again. Okay, we'll do it again just because that was a good time and you want to do it another one. Let's enter another bill with the bills up top, and this one's going to go to Edison. So we've already done Edison before, but it's not populating here because we did it with a check. If it was a bill that we entered last time, it would populate the account or the prior transaction below, which would give us some help to do this transaction. We're going to say this one was for $6.48. We're going to say, and then we might put like terms here or the due date on it. And then we're going to say, then this is that one where we got to say, is it going to go to an electric bill or electric account, or is it just going to go to utilities? Oftentimes, like I said, the phone bill has kind of broken out of the spectrum of utilities at this point in time, and usually we have then the electric and the gas going into the utilities here. So I'll typically be putting them into utilities. Now, this is another opportunity that you could break out. You could say, maybe I want utilities as the parent account, and then break out like the electric and the gas underneath it as sub accounts, possibly then including the telephone in that sub account too. That's up to you. And so we're going to go ahead and close this out. This is going to increase the accounts payable, and then the other side go into the utilities. Save it, close it, check it out. Let's see what happened with it. Let's see what happened. The balance sheet on the accounts payable going into the balance sheet. Then we've got the Edison increasing it. We also see on the profit and loss report, now we've got the utilities, double clicking on it. Last time we entered it with a check, this time entered it with a bill, but they're both being expensed at that point in time, even though the check had cash impacted and the bill did not. Let's go back to the home page over here, back to the home page. So now we've entered the bills. We're going to go to the pay bills now, where we're going to sort the bills and be paying the bills off. So in the pay bills area, we've got the 3 bills. Now, obviously, in a larger company, you might have a whole lot more bills that you might be paying off at one point in time, sorting those bills, and you've got your different filters that you could sort and filter by over here. So you could do your filtering, possibly all vendors, sort by the due date, for example, the discount date, the vendor, the amount due, and so on. So this is another area that can help you sort your information. I'm going to close the caret on the left-hand side. And so you have this area to sort the information. You can also sort the information as we saw with the sub-ledger reports, the vendor sub-ledger types of reports, the vendor balance detail, for example. And you can also sort this information in the vendor center to sort out the bills that you're going to be paying. We're going to be picking up the Verizon bill and the Spectrum for now. We're going to assume we're going to pay those 2 off at this point in time. And then we're going to keep those other 2 there. And so we're not going to go to the bill. You could set the discount, set credits. We're going to have the date at 2/28. The method is either a check, the scheduled online payment, or the credit card. If you're using the check, then you might be actually having the physical checks that you're going to be putting into the printer. That means you want to be putting as going to be printed, and then you'll actually put the checks in the printer and print them out. If you're actually writing checks, then you might hand write the checks, and then you might assign the check numbers to make sure that they line up with the checks that you're writing. If you're doing some other kind of payment and you want to track them as you enter into the system too, you might assign the check numbers here and then just not use a check number if you're using some kind of other payment method or system. So I'm going to say assign the check numbers, and then I'm going to say, okay, pay. And then you could then assign the check numbers if you have check numbers that you are assigning here, or you can let QuickBooks do this. Now remember, as we complete this process, we're going to be paying these 2 items, which are in essence 2 types of forms or data input forms that we're using that are kind of like checks or check forms that would be decreasing the checking account, other side going to the accounts payable. When we go back into the data from the financial statements, we're not going to come back to this sheet, this form exactly. We're going to come back to a form that shows a check payment for the accounts payable. So I'm going to say save and close. I'm going to let it assign the check numbers and say save it and close it. So there it assigned them out. I like to look at the register sometimes when I assign the check number. So I'll open up the caret. You can go to the register a few different ways. I like to go there by going to the lists drop-down chart of accounts and then up to the checking account, double click on it. and that takes you into the register. There's our 2 checks, and there's the check numbers that were assigned to them. You can see they're going to be labeled as bill payment checks, which is an indication that the other side of this transaction is going to accounts payable. Closing this back out. Closing this back out, if we then go to the balance sheet again, we can go back up top. Look at that, not up top, but accounts payable. Looking at the accounts payable, we got that payment that happened for those 2 items. Notice they happened in 2 separate bill payment checks, which means we can tick and tie out in accounts payable, which is typically how accounts payable work. It goes up with a bill, goes down with a paycheck. And then if I go here, not a paycheck, but a check that's paying the bill, then it looks like a check, except at the bottom, instead of having those 2 tabs, one expense, one the item tab, we just have this thing that's basically checking off the fact that we paid off this bill for the vendor of the Spectrum. That means it decreased the accounts payable. So I'm going to close this back out and close this back out. The other side then is going to be going to the cash account. We did the cash account. Or didn't I do the cash account? Let's check the cash account. The cash account, there we have those items there for the checking. It's going to be a decrease to the checking just like a normal check, but it's a bill payment check, meaning the other side went to accounts payable. Closing this back out. Then we can also take a look at the accounts payable subledger now. So accounts payable vendor balance detail, for example. We've got Edison bill still in place, and then Spectrum, it went up and then it went back down. Bill increases, the payment of the bill with a check form. Bill payment check is going to be the decrease. Same with the Verizon here. So we see that the total adding up to the 4,008, which matches out to the balance sheet right here, doesn't it? It does. That makes me feel good. And then, of course, you can see this detail in the vendor center as well. Drop down vendors, vendor center. If I go to the vendors, you can see then the activity. If I just want to look at the active vendors, or not just the active, maybe the open. So these are the ones that have open at this point in time. If I want to look at all active vendors and then check out, for example, Verizon, there's the activity for Verizon. We can go to the transactions tab and say, how about the bills? We only got 2 left there. If I look at all the bills, there's all the bills. And now we're left with the open bills of those 2 for Edison and that Fender, which is our newest vendor. And then we're going to go down to the trial balances, end this off, and you could check off your numbers here. Check in your numbers, see where you're at. If your numbers don't tie out, then try changing the dates. It's often a date range type of issue. We're going to be looking at the end of the period report to do our transaction detail. So that's another way you can check into it. And we're going to try to make our backup files as well if you'd like to rework some items with the help and use of those.